Good morning. This is the Elliott Wave weekly update for the Dow Jones Industrial Average being recorded on Sunday, June the 1st at 9:55 a.m. Pacific Daylight Time. The not much changes happening. The market continues to and consolidate with a little bit higher volatility in terms of the speed that we're going up, the speed that we're going down, and how big these moves are internally. Well, starting here on the 5-year weekly chart. So there's nothing really to add to the longer term count. So we continue to finish up, work our way higher in an intermediate fifth wave, which when complete will in turn complete a primary fifth wave and a cycle third wave. So again, the Dow, the S&P, the NASDAQ are all in the same larger count, which all are pointing to a more substantial, longer term correction is on the horizon. And what exactly is going to kick it off? I believe that there are many things, and I believe that what will kick it off will be a surprise, will be a shock to the market. And there are plenty of things out there that can do that. And so I don't want to speculate on what's coming or what's going to bubble over or what's going to create it, but understand that there are a lot of things in motion which could turn very sour for the United States, for our markets. So, with that being said, again, the main point that I'm trying to make is that the Dow and the Nasdaq and the S&P and likely also the Russell, I just have not updated it yet, are all lining up to put what I believe will be a longer term high in place via cycle third waves. And here in the Dow, I can just go very quickly over and talk about where this cycle wave three began. And as in the other markets, it began in 1949, in June of 1949. So if we just kind of take that, because we're now in June of 2025, so this cycle third wave is 76 years in the making. Now, some might say, well, that's just really too big, it's too long, it's too whatever. But truth is, the way that I've got my count going, that's exactly what it is. We have 1-2 on a super cycle, 1-2 on grand super cycle, 1-2 on a super cycle, or 1-2 on a cycle degree. So while we're finishing truly, and according to the very large picture, is 3-4-5. 3-4-5, and that'll complete the super cycle wave three. And then we get another 3-4-5 to complete the grand super cycle wave three. So the overall extremely long-term bull market is still in play. But because of the size of the degree, the corrections will be declared bear markets. So even within this cycle third wave, we've had several bull and bear market moves. And I can just show them to you. Here's one between primary one and two. That was a long-term period. It was a recession. It was not easy to trade, nor was it even fun to trade. And part of it, this is where I started as a teenager, buying penny stocks. So, and the markets just didn't, yeah, whatever. But it was a recession. And then we kind of went through, finished it, and then we started a period of expansion. And then here's the 87 crash that we all thought the world was coming to an end there. Then we continued to go higher in another expansion, economic expansion. And then we went into this was a period of nothing. Really, the market just kind of went up on its own weight, sort of. And then we had the great financial collapse of 2009. So you can see we've had the Vietnam War, all in here. We've had periods of great expansion. We had a crash right there. We had another crash right here, which just extended. and more wide. And then we started an expansion again. What fueled this one? Lower interest rates and stimulus after stimulus after stimulus. Well, there's the pandemic. Hardly recognizable. But when we were there and we were trading, it was like, wow, what is going on? So it was a bear market move. This rates going from their all-time lows in terms of interest rates and starting for rates to go up, that, and I'm going to show you that because we're going to go right down here to the 5-year chart. Now that's it. That was it was a considered a bear market type move. And what do we have now coming out of it? We have an intermediate fifth wave. So again, all of these have been a little bit longer term, right? So this was 10 months of pretty much heavy down, heavy down, heavy down. So again, considering that what we're finishing now is a cycle degree third wave, it has taken at least 76 years to get to this point, and it has contained several bullish and bearish considered markets, periods of a bull market, periods of a bear market, as defined by, you know, the S&P and certain levels and numbers, et cetera. But, 10% move to the downside constitutes a bear market. Okay, whatever. So in any case, what we have going on is this intermediate fifth wave, which will consist of 5 years of minor degree. If we have 1, 2, 3, and 4 done, what's creating all this? Tariffs and a trade war, and the fact that interest rates aren't going down, that yields are creeping up in the bond market. There's adjustments across the board. We have a burgeoning trade deficit, a burgeoning, not trade deficit, a burgeoning just a deficit, a government that keeps adding to the debt and keeps raising the debt ceiling and believes that the answer to it is to lower the interest rates and provide more free money, interest-free money or cheap money, let's say. That's being found out that's like, no, that's not necessarily the reason. But it continues to hold the market at bay. So again, what will that correction entail? I believe it will entail a lot of readjusting, first of all, debt, whether it's consumer, corporate, government, or whatever. There has to be a lot of adjusting. I think interest rates the yields are going to tick back higher. So once again, I'm not going to go into detail on what I think is coming and what it should contain. We'll find out when it does begin and what it contains. What I'm talking now is that this was all a part of our trade war and these tariffs that have been imposed, pulled back, delayed, reprieved, changed, brought back on, accusations made. I mean, there's so much going on in this period that it just kind of gets difficult to trade. So let's start from here. I'm going to bring it down, bring it to the daily, and there is minor wave 4. And that what we got out of that was we're going to pause adding to the tariffs, right? Or implementing those tariffs for 90 days. Boom, 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 boom. We went up. Then we came back down just in a corrective mood, and then we started to rally again. And then we had all this noise, which came about with a 50% tariff going to be imposed on the European Union. And then we had this massive rally, and I can bring it down again. You take it down to the hourly chart right there. We had a gap and a run on that. We had an International Court of Trade, so it's a federal court in Manhattan, block all of the tariffs, all of the trade war, just block those tariffs from occurring as unconstitutional. Got this strong rally. Then what we did? Well, then we got an appellate court to say, well, no, we're going to put a stay on that until we can hear both sides and figure this out. Boom, boom, taking them back down. So, and then intertwined in between all of that is just our normal expirations and gamma, as in the options, how the options are trading. So there's been a lot of volatility, and there's been a lot of talk about, is volatility too high or too low? So again, these are the adjustments I'm talking about. It's like trying to figure out where we are, why we're here, and what's going to happen next. And then going into discussion of everything that's affecting our moves. The bigger picture might be suggesting, say, well, we're still in a trade war. We still don't know what the resolve is going to be in that trade war. We've now got the courts getting involved in this trade war. We now have still the president threatening 50% tariffs on steel. So it's like, wow, okay, so what's that going to do? Is that like spreading it out? Is that going to create more angst? What is that going to create? So we still have a lot of things going on, and that we need to now figure out, okay, what does the Elliott wave pattern say to that? Which is why I come up and talk about a preferred and an alternate view or an alternate count. Because if we don't have both, surprises can hurt more. Or surprises may be like, wait a minute, we're expecting this run up to new all-time highs, but yet we just had a turn and a drop of 1,000 points, say, in the Dow, which we have had on numerous occasions during this supposedly rally phase. Where they're coming in right now is within a minuet second wave. So here we are. Let me just make some adjustments on where this is going to go, so I'm very accurate on my numbers. So we're in the minute fifth wave up, right? There's minute 3, here's minute 4, and it is an ABC, awkward looking, but still an ABC. And the only other choice I have, to tell you the truth, it's like we'll go one step out, that this is wave A of minute 4. And this is wave B of minute 4. And then we have an A, what is that? Who knows? So it doesn't necessarily work out, which is why I'm leaving that as a minute wave 4. And this is minuet wave 1 of a minute wave 5. That final leg up to new all-time highs, or at least, I'm going to go back out to my daily, at least we need to get above 45,008. Oh no, excuse me, 45,055. That's the previous high. We need to get above that level to complete this whole move. Actually, 45,073. That's the previous high. That is minute wave 3. Here we have minute 4. We're looking for minute wave 5. Right now, projections say 45,551. Well, that does it. That definitely is a new all-time high. And then the minor fifth wave now has projections that could take us up to 46,000, let's say 200 or 185 or whatever. That's also definitely brand new highs. Now, we have to think, with all of the negatives sitting in front of us, what's going to propel this market to go do that? Well, the reactions from algorithms, right? So the other thing that really sits in these decisions are algorithmically defined. The trades are algorithmically defined. And it's what trades in an option then has to be hedged. And if we're in a risk-on type of a trading atmosphere, the hedge is to buy. So the market will go up. We're in a risk-off atmosphere within our markets. The hedge is to sell. So we'll see the market come down. We see layers of gamma that I talk about constantly. And those gamma levels are produced by the options positions that are sitting at these particular levels. Now, I don't really have them for the Dow because the supplier, which is Spot Gamma, does not use their models on the Dow Jones. More specifically, they use the S&P, the NASDAQ, and the IWM. So the Russell gets there, but through IWM. It's where the options are trading, where the majority of the options are trading. Now, yes, the Dow Jones via DIA, which is the ETF, they trade options and they trade pretty well, but not as heavily as the SPX or the spiders. And while the NASDAQ also has options on the NDX and the NQ, it's the triple Qs, the ETF, where the majority of the options are heavy and they're traded heavily. So our gamma levels are levels that we can break up or down, our volatility triggers, our put walls, our call walls, and large gamma 1, 2, 3, and 4. Those are all coming within the SPX, the spiders for the S&P, and the triple Qs for the NASDAQ. So options really are the backbone of what constitutes our move. And I actually believe it is those options positions that could produce the thrust to get us to new all-time highs. And why? Well, at the moment, as I've described under the S&P, there are very large gamma positions and very large resistance sitting at 6,000 in the SPX. Very large at 6,000 in the SPX. And I've described the positions that are sitting there. But if the market, simply because of a technical run, simply because that's what's going to happen, the market goes up, and I believe it is going to be challenged, and it may be challenged next week or the week after. But the majority of the gamma that is out there and that's presenting as resistance is in the June 20th expiration. Now, before that, there are still at 6,000 plenty, you know, but the majority is sitting on the June 20th, the monthly expiration. And so we do have positions that are going to either be rolled, uh, they're going to be exercised, or they're going to be challenged and adjusted. And that, at 6,000, if there's a strong enough push and a break through it, there'll be no choice. All the traders will have to make their adjustments, and the computers will do it automatically. And that, in and of itself, could thrust the market up to new highs. That's my opinion. So again, what's going to take it up there? Well, I think there might be some things that are going to come in via the trade wars and all of that, which could produce a more bullish tone to the market, bring out stronger buying in underlying stocks that are common to the Dow, the S&P, the Nasdaq, and the Russell. So all of this, I think, is happening, but I think we're coming to a conclusion. I think we are really getting up to a level. But we've now tested here in the Dow, we've tested 45,000 and above twice. And twice we failed. Pulled back, gave it another try, pulled back much further. And now I think we're going back up and getting ready to go at it again. Now, Elliott wave basis, so pure technical here. We're in minor wave 5. It'll consist of 5 waves of minute degree, of which I have 1, 2, 3, and 4 done. Now, the only other thing I could say is that wave 3 might have one more leg up. And then we have another little pullback, and then we have another final run. But that would also suggest that all has to be done in the first 3 weeks of June. Now, so that's why I'm leaving the count as it is. And really what I think we can get is an extended fifth. Wave 1, not necessarily extended. Wave 3, yeah, we got our own 5 up, but it could be wave 5 that gets that strength within the 3. We did here, but I think in wave 5 we could get a very strong extension within wave 5 of 3. Excuse me, wave 3 of 5. Ooh, dyslexia. So in any case, I think we can move very quickly to new all-time highs. So let's just look at the fibs. Our fibs that we run now are wave 1 to wave 4. So the length of wave 1, we've shifted over, we put it onto the bottom of wave 4. So now we have Fibonacci levels for the going or the coming minute wave 5. The most common is that wave 5 will equal wave 1. Wave 1 was very large, right? If we remember correctly, off of that low and that just that one day, the Dow was up over 3,000. It was incredible. It was like amazing to trade it. It was amazing to watch it. So putting that over here, you can see how, yes, 100% is 45,552. I'm going to round it up. Definitely a new high, new all-time high. And if I get 5 waves up, that third is going to be the one that's going to take us most of that distance. That's my feeling. So where are we within this? 3, 4, 1. So now I'm going to break this down. I'm going to take a look at the hourly chart. This was a very strange move between Wednesday, which so on Tuesday is Tuesday afternoon / evening when the court made its ruling to block all of that. Boom, rallied up. The next day, it just basically worked its way down, all the way down. Now, I could put this as a wave 2, but this is not really letting me know that this is not 3 and this is like something else, and that I don't know. So could it be 1, 2, 1, 2, and we're going to start to launch inside the third? It could. It could. In which case we would run fibs from here to here, and those are going to be extensions to give us where we can find some resistance. Now, outside of that, if this is 1, 2, as it is, as I'm marking over in the NASDAQ and the S&P, well, then we're going to put it in this way. And so we can see that wave 3, and I actually will leave this up for right now. Wave 3 would be equal to wave 1 at 42,925. Now, of course, I'm always going to be looking for more, and wave 3 could definitely extend. And let me say okay to that. Actually, I can clean this up a little bit. Those would not make any difference. So we'd be looking for 100%, 1.618%. So we're going to leave that up like that. The 618, yeah, that could come into play, but we'll look at that differently. So again, here we are. So if we get up 1.618, well, 43,611. Boy, that starts taking us up into possible new all-time high, which we're looking at up here for the minute. If I get more than 1.618 because it's a super extended, well, I can put on our next level, which would be 2.618. And now we're at 44,000. Could it do it? Yes. Could it be news driven? Absolutely can be news driven. If the appellate court, the federal appellate court that put a stay on all this, determines, nah, we're going to rule against that and reinstate everything. So all those tariffs, that's well within what the president is able to do. So that's the question. What power does the president hold putting on the tariffs without congressional approval? That's the question out there in the courts right now. So we got to wait and we got to see. We have to see what and how all of this is going to unfold. If it unfolds more favorable to the market, in other words, that companies that'll be stuck with these tariffs are released from that, well, then I think we can have a strong rally. If not, and all of those tariffs remain in place and more get tossed out there, well, I think we could really start to decline again. So how's it going to affect the count? Well, I think initially we could rally and then we still can pull back and it still can be a part of 4. But from here, the market really cannot go as far as we think it could, because there's wave 1. Wave 1 is at 40,779. That's the high for wave 1. The market cannot drop down in a 4th wave and overlap that unless it's a triangle. a diagonal triangle. And right now, I don't really see it that way. Could it be? Yeah, it probably could. A, B, and then we got a one, two, three, four, five, and that ends up being an ABC, and we call it wave three. Three for wave one, three for wave two. Wave four then could overlap, but then we'd still be looking for a huge rally to take us up to new all-time highs. So again, much still to come, but it could be a choppy ride. Now, that's not untypical for a fifth wave. And the larger the wave, the much more chop we could get. So all of that would fit into this finishing move on the degree that it's finishing. If we're finishing a cycle wave three, it should go out in style. In other words, we should thrust up towards new highs and get whacked back down and thrust back up. So the violence within the market and the moves will become very confusing and could cost some people a lot of money. So again, it's going to be a wild ride. And I think we've got that all in here. It has been a wild ride, all on the change of a conversation, an announcement being made. And that's really what can control our moves today. So for right now, here I have it. We have to allow for we could get a rise up, and it could be an irregular B wave. So in other words, this is A of 4. We get 3 up to be B of 4. Maybe we get to 42,925. Maybe we get up a little higher. So we can get that. And what I can tell you, let me just I'm putting it out there, and I know this may be confusing, but I'm not doing it to make it confusing. I'm doing it to show you what levels we could have to deal with. So here, I get rid of all of that. And now I put in 1.236, and I put in here 1.382 for the irregular B, right? And we just kind of move that down. Boom. 1.236, 43,164, 1382, 43,403. Now that could be still an irregular B wave and come all the way back down. And I mean all the way back down. Back down towards 40,000, 41,000. Right? We go up 1.236, 1.382. So we go the full blast. We turn around, be looking for 1.618 on the way back down, which is going to take us below that level. Right? 1.382 is 43,403. 1.618 is going to be back down to here. All of this is possible. And with the rhetoric that's being tossed around, yeah, I see it both ways. Ooh, rally. We saw it already, right? That gigantic rally overnight. And then to see nothing but to see the whole thing turned around and brought all the way back down. And then rally again. And then watch it go up even further and then tip it back over. All possible, still within a minute fourth wave. And we still got another big rally to come. That's my main point right now is these are all possibilities. And to say that they can or can't happen, no, I won't do that because I believe they could. I mean, if someone can say, yeah, I was absolutely expecting that rally to come overnight and then to retrace it all out before, oh, actually, pretty much all of it before we even opened. And then once the market opened, we came down to the low and then rallied up off of it. It's all, if anything, guys, it's remaining very interesting. So yes, a little bit larger picture, a little bit longer term, but that's all within the month of June, I believe. We can do all of that and still run up and make new all-time highs. But maybe those new all-time highs get held back until after June expiration. If we free up all that gamma that could hold the market back at S&P 6,000 and then also hold any downside above S&P 5,000, where there's a huge position, then yeah, I think we still have a lot of possibilities after June the 20th, which is the expiration, to then do this into July, to finish this in July. I got to take it day by day, but these are the possibilities, and this is what I'm dealing with. So right now, I'm including several. I'm going to just change this so that it's not confusing, because it really would be in this color, because that would be the B wave. So I'm going to leave it there. So if you're coming back to look at this chart, be like, what the hell is the yellow? It is in a regular B wave. So if four is not done, and this is A of four, then B of four. So it's going to also be three waves. Bringing this down to the hourly chart right now, three up, three down, could be five up, and that's three. That's an ABC up. And we take it to new highs, believe it or not. And there we have it. There's our 236 and 382 sitting way up there. Okay. So, and if it's a third, we still got to deal. Okay, well, that's the 100%. Wait a minute. What's going on? These are the choices. We do go up in a third and we keep going. And if we go beyond all this, we get up to there, I can knock this out and put this 1, 2, 3. If we go and we get up to here and we reverse suddenly and with some strength, then I have a regular B and I'm coming down in a C wave, which should bring us back down to here. So I can't tell you which one. We now have to probably plan for it or at least be able to trade it. Okay, so that's actually the picture in the cash market. Let's go over and relate it all to the future. So futures market's a little bit different. Notice that rally. Notice the decline. Took it all back. So let me just fix this. Nope, that's not what I wanted to do. I wanted to just activate it and put it down over to here. So this is four. This is going to be wave one. And so I'm just filling it in because I need people to see my process. And that's A, B. See, now you could even see it's more pretty much probably A, B. Now, this is where we could rally or we could just drop. So I'm going to put this in, which is as far as I got on the other side as well. But now I want to just show you because a lot of that happened after the market closed. So the cash market was closed. So if this is A, and we're going to put it, we're going to put it in this fashion. So now we're showing you the other side. And this is a B. It may not go irregular. It could just be done. And we saw that in the cash as well. So if that's just AB, then we're looking for a C wave. Guess what? We just go like this to here to here. 100%. Wave C equals A, 41,528. Safely produces an ABC down. I can put a 2 there, which keeps the market very healthy because I don't necessarily want to come down and break below in a wave 2 because I can't. But I'd have to change this to A. And this, yeah, it's not done yet as far as a B wave. I do have kind of, you could say ABC, and I could put an A, a B, 1, 2, 3, 4, 5. That could work as well. So that's via the futures market, which is a little bit different because it trades in the hours that the cash doesn't. So there we have the whole picture, and that could be an ABC. And let me just kind of put that over, and this will be in this color, and we can have a C wave down. So in essence, what I'm saying is that we could start the week with a strong rally, but the way that the futures market is being put out there, let me get rid of all of that. I will leave 618, get rid of that. And I will put actually 618 there just in case. Yeah. So if this is A, and then we're going to get the B and the C, Well, now we have our levels. And what's the cash market going to look like? Pretty much the same. Pretty much the same. But the fact is that the cash market, again, doesn't trade overnight, obviously, and we have an extra hour, which we went up, made an additional high above what we did in the cash, and then came back down. So we have A, B. Is that a C, or is it a 1-2? Could be either. Could be either. This, though, does not look bullish. So, no, it's a dollar sign. So we can come over here. Much different. See, we did get that rise up, but then the market closed down lower. So A, B, C, B, 1. So A, B. So we can do the same thing. And if that's the case, where's it going to look like here? We're going to put this up there to there. So I will add it to the cash, and I'll fix that as I get ready to print it. So in that case, we're going to be back down to there. So I will show both. So we can have all things considered here for the cash market and then the balance. And one more time, cleaning this up. We don't need any of that. I don't think so. I think I'm going to here. I got 1.618. And there we have it. Still, and as far as the cash market goes, we're still in good shape. Comes just below that level, and which it can't. So if this is going to be 1 and this is ABC2, it needs to hold above that level, 41,346. So, and then again, looking in the YM, yeah, if this is 1, if this is A, B, C, and for 2, that's where wave 1 started. So you see there's differences. So there's differences. Here is where wave 1 started. But because we had more height in wave 1, it pulls it above, where, as you can see in the cash market, it doesn't. So that's why I get these changes. We have much higher. So A and 4, C wave can come down to 100% and be okay, right? So over in the cash, but it can't do the 1.618. And I may look back again. Am I talking off the top of my head? Yeah, I can't do the 1.618 because it's going to go past the 4. So let me take those off. It cannot do it. Sorry about that. Little things I see once I open my mouth. So ABC2, it can be. We can get down there. So this could fail. Instead of continuing to rally, we come back down. Now we're back in alignment. Can we do the irregular? We can. On both, it has to rally. 1, 2, rally 3, 4, 5. It's still A, B, 1, 2, 3, 4, 5, C. Get up to there. How can I show that over here? So it's going to be the same. And sorry for the confusion, folks, but we have A, and this could be 1. No, it's in the C wave. A, B, 1, 2, 3, 4, 5. And if that's the case, then wow. So then what I got to do is add them here. Oops. So we're going to be looking at, no, sorry. It's going to be here. Get off. And it's going to be here for the B wave. And we're going to run it down to here. And we're going to take all of this off. And first change that to A, B, yeah. Put it in that color. And we're going to change all this out. And this is going to be 1.236. And this is going to be 0.382. And we're going to get rid of those. Ah, come on. And change this to yellow and go like that. So here, not as high, but still two new highs above the three, 43,000, 43,134. So now they are in alignment. So either we are going to come down and the two can go here, but I don't think so because it's looking more like that was probably a five. But in the other markets, I do allow it to be an ABC, and I could do the same thing here. How would you do that? You can bring it down to the 15-minute, and you got to see where it can go. And that's right there. So it could be one, two, and that's the A, that's the B, and this is a C wave down. So it can be an ABC or it's just wave A. Then we got this mess. And this was a killer. So kind of just like an A, B, A, B, C, B. And then we got this C. That's just it's A, B, C. So Jordy did an irregular this way. Wow. That's the craziness of the market at the moment. When we get this in, you look at the 15 minutes, like, well, what was that move? Got this and got that, and what was this then? So is this A, B, and now we're doing a C, or is this ABC and this? Then that's the problem. If this is an ABC and that's wave two, what is this? So that's why this gets labeled A, and this is more likely B, and we still have another leg down. So the futures markets helps us fill in for the cash market. And sorry that I'm doing this live. I said it before, but it would have been difficult. So this could be A, B, and I'll fill those in so that we can see it. Those are A, and kind of not a bad thing that I'm showing you my process, how you come up with the choices. And again, they continue to hinge on what's happening in and around tariffs. So, no. Um, and that's just kind of the way it is. So we go from the possibility of starting the week with a rally to actually finishing wave two, minute minuet wave two. So we have 41,716 and 41,138, which we can't do because, let me just pull it out one tick. Can't. It can't. It cannot go 1.618. So we got to leave it at the 100 marker. So in the cash, it can't because it's going to invalidate the count. Wave two cannot exceed the starting point of wave one. So there you have it. Wave two cannot exceed the starting point of wave one. So 1.618 doesn't work over here either. So we have it. There we have it. All clean. Now, if this is wave A and this is wave B and this is 1, 2, then we're coming down in the third, and that one then could work where we can break that because it's wave A and we're still in the 4. Another possibility, okay? I'm going to leave it as it is because it's cleaner and it covers this mess. But it still could be at wave 2 and 1, 2 coming off in a C wave. Right, that's A, B, and then 1, 2, 3, 4, 5 coming down, and likely would then go beyond. And then we're working back out on the larger picture being a diagonal. And then we're going to be, we'll connect 2 to 4. But if that's not 4, then I got to wait for it to come down. 2 to 4 to put the diagonal in there. All right, that's really got to be it. Otherwise, I'll be adding way more. I thank you for your patience while I walk myself through this along with you, but you can see the whole process in action as what we're doing. And then suddenly you see it and it's like, oh, okay, I have to include that. I'm glad I did it, and I'm glad that you all got to watch. I'm going to conclude there, and our next update will be next week.